So yesterday was a crazy day. The market, it got absolutely annihilated. It was a huge crash down. Volatility exploded to levels we haven't seen in years. And pretty much all of us got run over a little bit. We all lost money, all of us. Like we took a severe haircut. And in my case, even though, I do have a severe haircut, luckily my account is doing okay today. So on Monday, due to the volatility explosion, my account was seeing massive losses. And I knew some of those massive losses weren't real losses. Like if I could hold on and let volatility come back down a little bit and things would normalize a little bit, especially on some of my futures positions where I don't think it was giving me correct prints on, some of the P&L on some of my individual futures positions just seemed way off. Like there was one strangle that I had on in MES that typically I would expect that strangle for the move that it had going on as far as the market crashed down a little bit, but still my put of that strangle that was still so far out of the money, I would expect to be down on that position maybe $400, and it showed that I was down on that position $7,000 on a MES strangle. Like that was insane. And luckily things normalized a little bit today. The market went back up, although now, it's in the afternoon. It looks like it's selling back off a little bit, but it's much more of a normal kind of day as far as the moves. They're not extreme, exaggerated moves like that crash to the downside late Sunday night into Monday morning. That was a very fast drop. And of course, it caused volatility to spike. And now that volatility is coming back down, many of our positions that were way underwater are now looking a lot better today. I tried to put myself in a little bit better position on some of my stuff. Anything that was a reasonable kind of loss that wouldn't hurt too much, I went ahead and took off some of those positions. And I also put on some new positions, some much more safer positions. And hopefully you guys are taking advantage of this volatility collapse that's coming in today. Hopefully you guys were able to adjust some of your underwater positions, hopefully to make yourself a little safer. But today's video, I wanted to make today's video because I'm seeing all of these people reporting their losses, and especially as a video content creator, I'm noticing several YouTubers reporting some of their losses as far as what they lost yesterday, and some of the numbers are insane because I have watched several YouTubers today talk about they lost 30% of their account yesterday, or 40%, or 50% of their account in one day. That's crazy. And then I'm checking out some of the trading online community, some of the subreddits, and I'm seeing some people that post regularly online about their trading strategies, and I'm seeing some of those people that I thought kind of knew what they were doing. I know they're good traders, and some of those people are reporting massive losses, losing 35% on Monday or 45% or crazy kind of losses. And, not to toot my own horn, but luckily I didn't fall into that trap. In some ways, I'm a little lucky because I could have very easily been one of those people that lost 30, 40, or even 50% of my account on Monday. But luckily, it just so happened that, my positions weren't that terrible for that volatility explosion. The only real thing that hurt me is I did have about, 8 or 10 different positions in the MES futures. And most of those positions involved naked puts. And those naked puts just got absolutely destroyed, as well as one position involved some naked calls. And the naked calls didn't do all that well either because the volatility spike really just punished all your short options. And on futures, the problem with futures is they're so over leveraged because they're giving you like 5-to-1 margin or 6-to-1 margin on some of those futures positions when you open them. But when those positions go against you and when volatility spikes in a big way, all of a sudden that 6-to-1 leverage you were getting on that position, now your broker demands actually a normal amount of money. So if you were using most of your buying power on some of those futures positions, all of a sudden your buying power explodes to where you're using more than 100% of your buying power, which of course is not allowed. You get a margin call. Now you either have to close those positions that are losing positions. You just have to go ahead and realize the loss and close some of your positions for massive losses, or you got to give your broker more money. You got to deposit more money into your account to get your buying power back under control, under 100%. And of course, for most of us, neither one of those options are good options. And Monday's trading day really, I think, is great as far as it serves as an educational example of things not to do. Like all of these content creators, whether it be video content creators or people that post on social media, some of the people that I know are good traders, but for whatever reason blew up a significant portion of their account on Monday. This is, you can learn from this stuff because I see the mistakes that some of these guys are making. I'm sure they see the mistakes too. And what I just talked about with my futures positions and the buying power exploding and the weird prints because of the wide bid-ask spreads on an event like on Monday, when you get that kind of volatility explosion, all of a sudden people are scrambling around trying to buy options they normally wouldn't buy, but they have to buy these options to cover all of their short options that are massively underwater. And then the market makers are just screwing people over because the market makers are demanding outrageous prices for some of these options because they know people are desperate. And when they know people are desperate, they're going to charge you out the ass for some of those options that you need. And I would do the same if I was in the market maker's position, right? I would demand, as much money as I think I could get for those options. And, I think for when I was looking at some of these content creators that were blowing up their accounts, almost all of them did involve futures trading as far as options on futures. That really was the killer for most of these guys, is they had way too many naked puts in the futures, or strategies that involve naked puts. They're not just trading straight naked puts. Many of them were doing naked strangles, which of course that's a naked put component. Many of them were doing ratio spreads, which has a naked put component. And some of them were just straight up just selling naked puts. Naked puts are probably the most common short option strategies that so many of us make. And you've got to be careful. You can't have too many of those things on. And especially you can't have too many of those things on in a very highly leveraged product, for example, like the ES futures or the NQ futures. Because all of a sudden, when you get that crash and volatility spikes, all of a sudden you're using more than 100% of your buying power, and you're going to get a margin call, and you're going to be forced to close your positions. And not only are you going to be forced to close your positions to get your buying power under control, but you're actually forced to close your positions at the absolute worst time, because those positions are down the most money they're ever going to be at during that crash, right? Monday, for example, all of those bad prints, some of my positions that were showing thousands and thousands of dollars of losses, well, the next day we're showing no losses, right? So if I had been forced to close some of those positions on Monday, I would have been absolutely destroyed. But luckily, I wasn't using 100% of my buying power, and I was able to last until today, hold out till today, and all of a sudden, things are kind of back to normal. Volatility is still high. It's still at the high end of its range, but it's not crazy high like it was on Monday. And that really, again, I'm making today's video because I think we all should learn from this lesson. We all should understand, don't get too leveraged. Do not use too much leverage, especially on these futures products, because in the end, many of the people that got put out of the game, and there were some people that absolutely got put out of the game. I saw a couple of content creators, a couple of options trading channels that all of a sudden, their content creators are calling it quits because they lost so much money on Monday, they don't even want to trade anymore. And all of those guys, by the way, were also trading futures products. It seems like everybody I saw that was taking massive losses, anybody that got absolutely boned on Monday, it was all due to just being too leveraged on those futures products. And you have to be careful about that. And a lot of it, I'm going to be honest, a lot of it too is arrogance, especially if you've been trading for a while and you've been making money for a while. We all fall into this trap, myself included. If you haven't taken a big loss in a while, you start thinking that you're Superman, nothing can touch you. And then you start putting on more trades and more trades. You start taking on more leverage, right? You start using more margin, and the next thing you know, something like Monday happens and you just get your ass handed to you. And again, it's an educational experience. I know we all lost money on Monday, but sometimes the loss is worth it because you think of it as a payment, right? You paid to learn a lesson. So don't think of it as a loss. You hopefully got something out of it. Again, you gained a little knowledge from what we all experienced yesterday. Anyway, some food for thought. Peace, guys.